Okay, so I want to talk about the properties of the indicator. And to look at them, what you want to do is go to Indicators, which is this tab here. You can also right-click and go down to Indicators. You can get there as well. So you can either do that or you can just click on this box right here. Okay, so just make sure you highlight the indicator, the PPT box. And then our suggestion is just to leave everything alone. The only thing that we would suggest changing is the colors, if you prefer different coloring. But other than that, you really shouldn't touch anything here. These here, absolutely do not change these. These are an absolute must. They need to be all zeros. And then there may be an updated version to prevent some of the changes. So this video may not match up with what you're seeing, which is a good thing. But bottom line, just don't change anything. The only thing that we would suggest changing, but only if you want to, is the colors of the lines. And that's it. The other thing that you want to look at is go to your data series, which is this little icon right here. Click on it. And then make sure that you have 15 days loaded. And we're going to talk about the 612 tick chart on the E-mini S&P 500. So make sure that this session template is set to CME US Index Futures ETH. Okay, you just go to the drop down. Okay, so the box is very simple. And what will happen, as you may have seen in other videos, is a simple box will form when the specific parameters that is contained within the algorithm have been met. So what we want to look for is for price to not just break above or below the box, but to close above the box. So this is our visual trigger that price will most likely go up. It doesn't mean that it will, it doesn't guarantee that it will. It just gives us the odds in our favor and increases the probability of price going in that direction. So obviously I'm not an advisor, Prediction Point Trading is not an advisor. So rather than giving you advice on what to do, what I want to show you is what we like to do and how we like to use the box. So what we do is keep it very simple. And so our entries are generally a tick above the top of the box for long positions and a tick below bottom of the box for short positions. And so we always want to remember that we need to wait until we get a blue arrow. Simultaneously, in this case, I have a bar chart. The bar will turn blue for long positions. And vice versa for short positions, we want to wait until the bar has turned red and we also get a red arrow. Give us that visual cue. So what will happen is you will see these price target lines extend horizontally during a current box. And anytime price reverses and goes back and qualifies above or below the box, like in this case, we had a box form. We got a red bar with a red arrow to short. It hit our first profit target. So for us, this is a winner. It comes back and it qualifies for a long position. The bar turns blue. We get a blue arrow. This is also a winner. And in a short position right now, we got a red bar with a red arrow. This is also a winner. Whether they are winners or losers is besides the point. Trade entries will re-qualify when the bar closes above or below the box. When a new box forms, the price targets will shorten to the width of the box. And this allows you to see historically where price has gone in relation to the box that was formed. On the topic of stop losses, we are a big fan of using stop losses, if anything, for the sheer aspect of losing the internet or a power outage or a myriad of things that can happen while you're in the trade. So anytime you get into a trade, you really need to protect your money every way that you can. And so initially for us, stop losses become more of a protection. And so as soon as we're in the trade, then we can manage the trade based upon what's happening. So stop losses are very subjective. Every trader has their own style, they have their own level of risk, and so it's virtually an impossibility to give a standard stop loss because everyone's going to be different. What we like to do is to place our stop loss either at the top of the box if we're short, or a tick above it, give it some breathing room, or if we're long, then the stop loss for us would go at the bottom or a tick below the box. And so generally speaking, what's nice about this type of trade is that you're not usually risking very much. And lastly, on the topic of orders, you can pretty much do whatever you want to do. Once the bar changes color, you could use a buy stop for long positions, a sell stop for short positions. However you prefer to enter the market, you can pretty much do. And what's really nice about the box is that on nearly all of the trades, not all of them, but quite a few of them, a great majority of them, it will generally give you quite a bit of time. You definitely want to react quickly, but at the same time, in most cases, you should have plenty of time to place your trade. And it's really going to vary trade by trade. One of the things to keep in mind about the box is that the red line in the middle, what you'll notice is that price will attempt to come back to it at some point. And so if you go back through history, you'll easily see that pattern over and over and over again. We won't get into strategies in regards to the red line because there's an endless number of ways to use that. But the bottom line is that knowing that in advance can allow you to implement your own trading style or strategies with that knowledge. So for example, if the red line is at an area that you're considering taking a trade because it matches up with another one of your strategies, then what it does is it highly increases the probability of that trade. So for example, if one of your other strategies suggests to go long right around this blue line somewhere, well, you know that the probability of price working its way back to the midline, the red line, is pretty high. And conversely, if you have a strategy that's calling for a short position at this area here, we can see that price had not yet made it back to this red line, and so that might be a great confirmation to use to go short. But there's a lot of ways to do this. The bottom line is that we're looking for a box to form. When that forms, we're looking for an arrow to appear, and simultaneously the color of the bar will change, which is our trigger to enter the trade. What we like to do is enter the trade a tick above the box on long positions, a tick below the box on short positions. What we like to do is place our stop losses either at the top of the box or a tick above the box on short positions, and at the bottom of the box or a tick below the box on long positions. And we like to scale out of our positions by taking profits at the first blue line and then trailing the rest of our contracts for the other price targets. And that's it. It's literally that simple. And the last comment I'll make is that just remember that you can put this indicator on virtually anything. Stocks, Forex, any other futures that you want to trade, crude oil. It really doesn't matter. As long as it can be charted, this indicator will work as long as it's on NinjaTrader. Now, as far as what time frame chart works the best, that's going to be a little bit of trial and error depending on what market you're on. The ES is our favorite market to trade. It's very fluid. There's a lot of volume. And for us, the movement is very easy to read. So if you have specific questions about the ES, for the most part, we should be able to answer those. If you have questions about other markets, we'll do our best to answer your questions. But if it's not something that we trade, we won't have the experience with that market to give you the best answer. So the bottom line is keep it simple. The box is not complicated. It has very black and white parameters.